World markets show red arrows across the board, with most of Europe down close to 1.5%. The Bank of Japan failed to deliver on market expectations, sending the Nikkei tumbling lower. Time to map out support levels for future adjustments. I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are down big this morning after a sell-off in European markets and Japan's Nikkei after Bank of Japan disappointed investors. What is your take on the open, Scott?
I think it's definitely tricky because after yesterday's inside day, some would have expected a little bit of digestion, quiet action. So to come in today with the futures down 15, 16 handles, some traders are going to probably have to figure out what they need to do, whether they could salvage some trades, whether they could buy the dip, and we'll have to go over a lot of key levels on what to look for in order to figure out today's action. Right,
so speaking of those levels, why don't we pull up a chart and show us the ones that we should be watching today?
Okay, so if I'll take two looks, one of the SPX and then of the spiders. So you go here to the SPX futures, which we talk about. Look at the chart here, guys. Okay, remember the outside day on May 22nd, a time to switch gears, time to maybe sell some longs, get net short, and then remember this wedge. This wedge was that pattern of indecision, could have been distribution before resolving it on this Friday. Remember that Friday, what was it, May 31st? Anyway, to the downside. Last Thursday was your day for big adjustments. That was the outside day by the 50-day moving average, a spot to cover some shorts, to perhaps look long, and then boom, some follow-through. Jobs Friday into yesterday's open. We talked about selling some and trimming something into resistance because we don't like to chase on day three, especially after a 40-plus handle move off the lows. So with that said, we come in today, and I'll take a closer look at the spiders so you can see that gap. Okay, question is, where do we hold? Okay, so as of right now, I'm going to be looking at 163.14. I have a spider hedge on, which I'm probably going to be covering into this level, and then I'm going to see if I could actually flip and get long the spiders. At the same time, when I cover the spiders here, I'll see if there's any strong stocks out there that close on the highs that I could potentially buy to add to my position, or if they can't bounce, maybe salvage some, take a little bit of loss, because we close below 163.14 with some authority. Most people are going to be talking about at least a test of the 50-day moving average.
Well, clearly it's tough to anticipate this kind of news and this kind of action, but what could we have done leading up until today?
Well, you just got to follow your rules. So, Thursday was the key time to buy. Yesterday was a spot to trim. If you missed Thursday or Friday, I know a lot of traders might have been upset. Maybe they chased and bought yesterday or bought too much. You just can't do that. You have to get involved when the A setup's there. When it's B or C, you have to really be able to just, close, not to say control your keyboard, but control your hands that touch your keyboard, because that can get you into more trouble than missing out on a potential situation.
That sort of relates to the tactics that you use, right? When you see a sea of red like this, you kind of go back to those rules, looking for relative strength.
Right, and that's what I think we need to do today. We need to look at what was the strongest, if you want to actually look to buy something, but then there was also some weak stocks and some areas that didn't bounce back well at all that might be decent continuation shorts for those that are looking to do so. And also, you talked about the news in Japan, okay,
right,
about the BOJ failing to impress, and that was after an already 5% snapback. So, we take a quick look at the EWJ, and let's see if there's more opportunity here. This was that Thursday red dog reversal, okay? Here was your follow through on Friday. Yesterday you had a gap up, okay, into this next resistance area. So, now everyone's kind of crying bloody murder, but overall, you look halfway into this bar, and maybe you could rebuy this dip. We're still well off the lows here. I know that, unfortunately, Goldman made that big call yesterday saying, I would buy the Nikkei futures ahead of today. So some people got bagged on that, because here was the right entry, not into the third up day, into resistance. Anyway, with that said, I would watch like 1080, 1090, see if that's an area potentially you could buy the dip on the EWJ if you missed this first part of the move up to 1124.
Well, so as we go ahead to use those tactics that you speak about, looking at strength from the prior day, we did see strength out of the semiconductor. So perhaps we should look to stocks like those, stocks like SanDisk, which showed relative strength yesterday.
Yeah, if this market comes off the lows and they let some stocks make 52-week highs. This chart looks great. You look here at the chart, unbelievable closing the highs yesterday, above all the moving averages right there. So if we were to, come off the lows, which we might, I would say, you buy it in the red, and as it goes green and positive, perhaps you're able to add through 60 for a 52-week high breakout. This chart looks very good, very constructive. I just don't know what type of momentum to the upside there will be, as there's a lot of pressure right now.
Right, of course, but it wasn't the only one in the semis that did show relative strength yesterday. Even Intel held its 21-day on Friday and then had a nice upside follow-through yesterday.
Yes, and it seems like it's finally starting to make the right moves. Some of their products are going to be in Samsung. Yesterday, Apple announced that some of their chips could be in a few of their products. So overall, Intel seems like it's been one of the chosen ones. We talked about it since 22. It just had a decent pullback. You look here at the chart, you will see, lots of different areas to talk about. This was technically when it broke above the core trade around 22. And then here is when it had another initial trade. And then look at this. Look at this topping tail reversal there. That led to a decline back to the EMAs. Then we bounced off it. So I would say, today it's probably going to be down. Look to see if we can go from negative to positive. This was yesterday's low right around, 2460. If we were to hold this and build, I think this continues, and can continue to have more traction. So this is something I would look at to see if early morning strength comes into it.
And ARM Holdings had been on the radar for a potential quick bounce, but is that still on the table, you think?
This has been, I think, Intel. This one was a strong one. It was ahead. It was in all of mobile, started to fail. This is one that I hate to short, lower price stocks or stocks that have already had big pullbacks. But, overall, this to me is, a pretty broken stock. You had this, wide range bar to the downside right there, and then you had this inside bear flag continuation. It did bounce yesterday off of support, but I would say, watch this moving average. If it can bounce back above this moving average, soon enough, perhaps, this could continue to get down to the 200 days. So this is one of the weaker semis with what has been a pretty strong group.
Well, another group that could be one to watch today would be the solar stocks, as they showed relative strength yesterday. We're going to go in the trenches with those right after this quick commercial break.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet, at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Well, the solar group can be somewhat of a more speculative, riskier group to play, but they did show relative strength yesterday. We're actually the place to be. Do you think that we could see potential action, good action there today?
Well, over the past year, when they had that huge decline, they were like one-day wonders. Every now and then, you get like a 3-day move out of the solar stocks, and if you were actually long them, you feel like you stole something. But ever since for solar started to come back into play, there's been actually commitment to this group. And this group has shown follow through. It's been a group that trades together. So every now and then it's really good when one stock shows strength, another one shows strength, so you could trade them as a group, which is what traders like to gravitate towards. So if you look at the chart of First Solar, you will see, not really a one-hit wonder. Ever since April, when it had this igniting bar to the upside and then consolidated and showed commitment, you had extra follow through here all the way up to this little topping tail, which caused some consolidation. And yesterday it closed strong. I don't know, what could happen today, but I know according to my rules, something that closed strong, I would say it's something you look at. So see if it continues to hold the 8-day moving average. It's negative now. If it can go positive and trade through yesterday's high of 56.70, it could be worth a look today for some type of cash flow and some follow through.
Now, could SunPower also be one to look at today, because this one registered gains of about 9% yesterday?
Yep, this one has been one of the ones that are in the just say in the group or yeah, one of the hot ones, so to speak. So I hate the word hot, but well, solar stocks, I guess you could use that. Well, anyway, you look here, and I know that guys on my desk and the girls, the truck girl and Taylor, they've been focusing on this one, and this one had a really nice move here, and then it had a bit of an outside reversal there, which gave you a bit of a corrective activity, and then it consolidated at the 21-day, and yesterday broke out. So if the futures were up today, this thing would probably be higher. With the futures down today, perhaps it's worthy of some opportunity. So I would look at the 8-day right here. If it could come back in, and hold this area or hold a little bit higher, perhaps buy the dip, and then we find some footing, and then it trades through yesterday's high and continues. But overall, this was a very strong stock yesterday, so it's worth a look. If they just want to sell everything, it's a different story. But if you see some kind of relative strength from the morning futures, I would look there.
Now, Solar City's lockup expiration date is today, so there could be extra volatility in that name today, right? What would you watch there?
Well, these type of trades are different. First of all, Elon Musk has done all the right moves, and he has a huge following now. So I'm sure, the guys that are in the private or whatever they are, and their shares are being unlocked, they're not going to say, okay, I want to sell today, especially considering the type of move that it had. But who knows? So typically the way I've seen from experience on these, when these lockups expire and everyone thinks there's going to be a flood of supply, if it doesn't go down in the first hour, all those shorts that have been playing for that have already seen a big decline, they get squeezed. So it's worth a look here. You look at the chart and you will see, this stock was as high as what? 52.50. So then this upper flag, remember that, broke to the downside. And right now, this is somewhat of a bearish pattern, I will say, because it hasn't been able to bounce back up, but there's also been a lot of sellers in there. So I would say use this as your inflection point, 35.50. It's opening below. So with that said, if I'm not sure when the lockup happens, if it's in the morning or during the day, whatever it is, if within the first hour they can't keep this down, perhaps it goes from negative to positive and gets some buy pressure. Okay, there is really big support down here if it happens to get hit hard at the 50-day. So this would be a spot for major opportunity, but right here, this is your inflection point on the support side, 35.50, and here on the resistance side. So we'll see what happens today. I'll be watching.
Now, how about JA Solar gained over 13% yesterday? Would this one be on your watch list for today?
Yep, this was a day one, and every time you get a day one, usually you can get day two or day three. We love day ones because day ones ignite. Day ones sometimes give you follow through. That's one of our rules is we love to buy day one, maybe day two, day three. We start trimming it, and by day 4, day 5, I'm crying because I sold it too early. But obviously, we didn't see that happen today in the futures also after the 3 days. But anyway, you look at this, it's definitely one of the more speculative ones. It's one of the cheaper ones. This was a huge move up to almost $11. Yesterday, it did wake up, closed near the highs into resistance. So today, if it is off a little bit, it's something to look at for potential negative to positive. Then if it gets above yesterday's high, it can continue. So it should be on the radar if they let the solar stocks breathe today.
All right, time for some quick hits here. Let's talk Tesla, which did take a break yesterday after Friday's rally had a small inside day. Would you say we should maybe avoid this one today, given what we're seeing in the futures?
I don't know. Sometimes these offshoot stocks tend to, be in their own little world. But this one was the one that had the big article from Barron's talking about how I guess it's too lofty, the P is too high. Elon, I think, left the interview. Anyway, it was down. And a lot of people over the weekend were like, oh my goodness, I'm going to get crushed in my Tesla long. But it went from negative to positive. So that's when I said, okay, if you were upset and you were worried about your position, you probably had too much. Here's a spot to make adjustments and get a little comfortable. So anyway, it went positive. It traded around. You look at the chart now. Here's your defined resistance. It does have some room to the downside, the support, if it wants to probe a little bit. It is down a little bit this morning with the futures. This would be support number 1 right around 95, 96. So maybe it tries to go positive and hold the upper end of this minor little wedge. Or if this doesn't hold, it could work its way back. And then I would look at the 21-day that held the prior 2 times, earlier or in late May. So, I would just continue to take trades with this one as it needs more time to set up a more macro pattern.
And over in tech, we've talked a lot about Amazon and Google being the standouts there. Tell us what levels you'll watch in those today.
Well, this one, it's funny because, sometimes my process helps me, sometimes it doesn't. And yesterday I was in Amazon from Friday when it triggered, and then I stayed in it overnight till yesterday, and then I traded it, and then above 280, I'm like, you know what, I'm going to take my trade for now, and I just know I'm going to be upset with myself when it's 300 because, I was, a little risk averse, and I took the trade. But anyway, if that was you, then today, down $4 or $5, you have an opportunity. So you look at the chart, you will see, the reason why we liked this was because of this nice descending channel. Then it held higher. Then it had to move back to almost a historic high. So with that said, there was two different trades. There was a trade through this resistance, and then, I think the real level yesterday was 277-ish, and then whatever, it closed on the highs, something that some people took home. So if you want to take their pain, I would say right around here, this 275-ish, this should be a level it should hold. Okay, if this wants to potentially take out this 285 or 284.72, I would think that some buyers come in right around this 275-ish or 276, and support it, and that would be a spot where if you sold some strength, you could take a look right here, and then the 8-day is 273.76. So that's definitely worth a look today.
And how about Google?
Google is the same type of scenario. Tweeted about, or in my morning note, I'm like, this move from the descending channel could take it up to 890-ish, and it closed actually, look at that, 890-ish. So hopefully, if you are somewhat risk averse, after a 3-day move, here was your red dog reversal Thursday, here was your break above the descending channel on Friday, here was your follow through yesterday, you sold some, okay? And if you did so, today's down move, weakness in the futures, you have the luxury of looking to see if you could rebuy 878 or maybe even rebuy 873. So this is support 1, this is support 2, and that could be opportunity to find some commitment to this prior move, which did look pretty healthy.
Well, traders were not impressed by Apple at the Worldwide Developers Conference yesterday. The stock did trade off. It's now approaching the 50-day, so this is probably the key level to watch, right?
There you go. If the 50-day doesn't hold this time, I think that you'll see even more people just kick it to the curb. And unfortunately, Apple did come out with a lot of new impressive upgrades, but it was everything that the street anticipated. Even the iRadio is something the street anticipated, and the stock is just not acting well, and it's hard to be trusted. Ever since the decline from 700, you've had some mini rallies along the way. Like I remember this one, it worked pretty well, but then you had to have stops in because it failed. This one to start 2013 ignited, gapped up, couldn't hold it, failed. This one, when it broke this initial downtrend, gave us a nice trade, but then look what happened here. It failed. So you've had to just take your trades and run for the hills. And then this one, remember this one from 420, went as high as 460 and change into resistance and failed. And then this declining or trend line is controlling it. You take a close look here now, you will see that this ascending channel broke to the downside. It did hold the 50-day on Friday, which is why I got in it, but then yesterday's failure got me out. So now maybe I'll look to see if there's some kind of opportunity here, but if this were to trade below 432-ish, or 434-ish, I think the next level is 420, and it's hard. It is what it is.
Right.
Just don't have opinions there. Keep trading the levels, and only if it shows commitment should you.
Well, in a way, Apple's loss yesterday was Pandora's gain. All those fears about the iRadio hurting Pandora were kind of shaken off yesterday. The stock gained about 2.5%. So how much room to the upside does it still have?
And this one, it's interesting because I said yesterday, is Apple actually enforcing their business model or endorsing it, so to speak? And it's kind of crazy that Apple, that's been trying to be first to market and all these things, is going into their market.
Right.
It's so different. So that shows you how they're getting mature, that they're having a hard time innovating, which has been one of their problems. But anyway, you look at Pandora. I'm not so enamored with the trade. It had one of those failures right here, and then it failed again right there. It did hold support. So if it wanted to continue, I would say, you have some room into the mid-16s. So at this point, I think it did act well yesterday with Apple. It was an announcement. That's what some people were scared about. It was a decent trade yesterday. If you took it home long, like I traded it yesterday, made some money, but then I have it long, I'd like to see it go positive. And if it could trade above 1576, maybe it continues.
And how about eBay? Saw a strong bounce yesterday and gained about 3.5%.
Yes, eBay is something that has been weaker, and everyone's like, "Why is this so weak? Why is this so weak?" And finally, yesterday, had your potent bounce. So this is one of the candidates for a cash flow trade. Okay, it bounced off the 200-day. You look at the chart here, you will see touched the 200-day, finally had a potent bounce. Okay, closed near the high. So some people probably said, "Oh, I'm going to take this for day one," because it can get up to resistance, and now it's down today. So this is something, if you did not take overnight, look to see if you could buy back halfway in. Look to see if you could buy back, 52.75 if you don't own it. So this is something maybe can go from negative to positive, or just give you a quick little trade, but anything below 52, and I'd be very, very skeptical.
And lastly, Netflix has been has had a good setup. It's been holding upper support around 214, 216. I'll have to see if it continues to hold today.
Yes, I think it's down a few points. Sometimes on these down days, Netflix likes to have its own day in the sun. It likes to stream itself. And with that said, it could happen or not. You look at the pattern here; it's tight. It's been one of the chosen ones. It's been holding this support, going sideways, holding 214. If it goes from negative to positive, that would be great, considering I'm long some. And if it starts getting above 223, maybe you'll see some momentum here. But overall, I think that this level is your level to trade against. If you want to be a little looser, give it down to 209.91. But we shall see. Overall, it's still controlled by this downtrend. We will be taking a look at it today. Hopefully, it could at least go green and give us some way out of it.
Yeah, well, hopefully we've helped a little bit to steer you in a sea of red today. But what will you be focusing on as you head into the trading session?
Just can anything go green? Can anything that was strong yesterday give you at least a way out, if not, a way out plus and then some? As far as that gap that I talked about, that's going to be interesting to see how the market handles it. That could tell us what's going to be in store for later this week. If we could hold, 163 in the spiders, if we could hold, I think that level is something like 1628-ish in the S&P, perhaps. It's a higher low, and then we continue and things look constructive. If we don't hold that today, then I would say the bears will start growling, and then that could mean a little bit more risk off and a little bit more tactical trading, and then we'll see whether or not we have to retest a 50-day. But don't have an opinion. Look to see what could go green, if anything can come off the lows. If they can't, salvage a trade, get out of the way, and then we'll look for a better setup in the coming sessions.
And happy trading. Have a great Tuesday.
Yes.